The Reserve Bank of India's Monetary Policy Committee has kept the repo rate unchanged at 5.25%. The decision was announced by RBI Governor Sanjay Malhotra after the policy meeting held between 6th and 8th April 2026. The central bank has also retained its neutral stance, signaling flexibility in future action depending on evolving conditions. This comes after 125 basis points of cumulative rate cuts in 2025, followed by a pause in February 2026. Now, the decision was widely expected. The trigger for caution is the ongoing conflict in West Asia. Crude oil prices have crossed $100 per barrel. The rupee has been under pressure, and global supply chains are being disrupted through the Strait of Hormuz, a critical passage for energy trade. Governor Malhotra flagged all of these as key risks to India's outlook. The RBI has projected real GDP growth at 6.9% for FY27. Quarter-wise estimates are Q1 6.8%, Q2 6.7%, Q3 7% and Q4 7.2%. The central bank says growth remains supported by strong private consumption, continued investment demand and resilient rural economy. However, disruptions to energy supply routes pose risks. The RBI has projected CPI-based inflation at 4.6% for FY27, which is within its target band of 2 to 6%. Quarterly projections are Q1 4%, Q2 4.4%, Q3 5.2% and Q4 4.7%. While headline inflation remains under control, the RBI flagged upside risks due to rising crude oil prices, possible weather-related food price shocks, and supply chain disruptions. Core inflation pressures, however, remain relatively muted for now. The RBI has warned that global trade growth is likely to slow in 2026. India's merchandise exports have already contracted by 0.2% in the first 2 months of the year. Key concerns include weak demand in global markets, ongoing geopolitical tensions, and tariff-related uncertainties. On the rupee front, the RBI maintained that the exchange rate is market-determined and intervention will only aim to reduce excessive volatility, not target a specific level. So the crux of the meeting was that despite global headwinds, the RBI remains cautiously optimistic. It says India's macroeconomic fundamentals are stronger than before with healthy domestic demand, strong financial conditions, and continued policy support. But it also underlined that risks to growth are tilted to the downside given ongoing geopolitical tensions. Follow for more stories.